Tell me the name of the company. What are they? Excess Supply? I got the right one. Page 634. Wrong 12 last. Okay, anyway, so now what? Statement of cash flows, come on. You're writing it down yourself. So. And then what? For the year ended. And I guess it's December 31st. And you'd write it out real pretty, of course. Not for the quiz, but in real life. Okay, what was that, 14? Okay, anyway, everybody got the idea? Do that first. Then what? Very mechanical here. Operations goes first. They're upside down, right? We said. Okay. Then we go down about half the page, right? I'll put it on the other side so I can remember. Okay, you go down about half the page and what? Investing. Okay. Go down to maybe you're down 3/4 of the page now. What do you got? These guys know a lot more than they're pretending they know. They're just trying to annoy me. Right? So continue. The way this works is I'm getting paid. They're my customers. They don't have to do anything they don't want to. Right? Yeah. Good. Okay. Pretty much. Everything's voluntary. Coming to class is voluntary. Studying is voluntary. Reading the book's voluntary. Right? Taking the quiz is voluntary. Tests are voluntary. Finals voluntary. Yeah. College is great. Passing is voluntary. No. Yeah. Okay, anyway. What do we got, guys? Okay, changing cash is go up or down. Oh, well, we got one that's an increase. Okay, so increase in cash, huh? How much? $5,000. Okay. So I already know the answer before we start. Nice, easy statement, huh? What's the beginning cash? 29. What's the ending cash? Looks like it to me. So you already know the answer before you start. So I think I'd get that down first. Okay, what do you want to do next? I don't particularly care. Just make sure that you do what? Write down the change in every balance sheet account once and only once, right? Make sure you get it in there, okay? What are we going to put under operations? Okay, current assets. So we get the changes in the current assets and current liabilities, and then we're going to put what else in? Obviously, operations is revenues less expenses, so what's going to go in? Net income or net loss? Is this one an income or a loss? Income. So we can put that down right away if you want. But when we do that, what are we explaining? What account? Retained earnings. Yeah, so we got to make sure we pick up the rest of retained earnings. There's probably a what? Yeah, sure. Okay, so we can start there if you want. Okay, and we do the current assets and current liabilities. What's going to, and then there are going to be some adjustments to income for depreciation, gains and losses, the non-operating things that are on the income statement, right? Okay, and then over in investing, what are we going to put there? What do I invest in? Non-current assets, land, building, equipment. Okay. Both the increases and the decreases, right? Because they're big numbers. It's large amounts. Everybody good? Okay. The reason we do this is we're recording and it's going to be out on Moodle, YouTube's. Right? So I have hundreds of YouTube videos. I'm a star. And probably 1,000 people have looked at them by now. And I'm really a celebrity, right? They're the most boring thing. Yeah, true. Yeah. I should sell these, right? Oh, yeah, that could happen. Okay, anyway, but they're kind of useful.
They're like fine wherever you start actually talking about stuff again.
You have to scan back and forth. Oh, because I waste so much time? Yeah.
Right. I'm like, oh, he's talking about Volvo again.
Talking about his grandkids. Yeah. There we go.
What are you doing?
I told my wife that you said that I should buy a high-rated car. She wants to meet you.
Okay.
Yeah, an ally. Yeah.
I can arrange that.
So, all right. My wife is beautiful, but she's very expensive. Yeah. So, yeah. Oh, well. Anyway. She looks cute in all these cars. She always has. Still does. Anyway, so what goes into investing? Buying and selling non-current assets. What goes under financing? Non-current liabilities. So where the money comes from, right, to run the business. So issuing debt, repaying debt, long-term. And what else? Equity. You know, issuing stock, paying back dividends, buying back treasury stock. That's everything that's in the balance sheet, isn't it? It all goes someplace. Okay, so you want to start with net income? I don't care. What account are we doing if we do net income? Retained earnings. What do you know about retained earnings? Beginning is what? 25. Ending is I bet net income's at least what?
It's 37,200.
Oh, 37.2? It gave it, oh, geez, that's annoying. Okay, so it's 12,200 increase? What's the minimum net income must have been? 12,200. What was net income? There on the income statement. 12,200? Oh, well, what does that mean? Dividends were zero. Okay, we got no dividends. We know that, don't we? So they don't mention dividends is the problem, I bet. Well, no, they said no dividends. But they didn't have to say that, did they? You know there were no dividends. Okay, so what do you want to do to explain this account? Write down what? Net income of 12.2? Sound good? Easy. And now check off that account. Make sure you check off. Oh, by the way, we should have checked off cash, right? So cash down. Okay, what do you want to do next? You want to do the current assets? Okay. Accounts receivable, what happened? So if you have 7,000 more, what does that mean? You did not collect some of your sales, right? Got to put brackets around it? Good man. Okay, that's right, isn't it? Okay, good. All right, merchandise inventory? What kind of account is that? You guys ever had accounting? What kind of account is inventory? It's an asset. Current or non-current? Current. Have you both had it, accounting before?
No.
Oh, good for you. So she's the only slow one. You just haven't learned it yet. Okay, good. All right, now we got that figured out. Okay, anyway. Tell us what a deferral is. Oh, for God's sake. Okay. What does debit mean?
Left.
Oh, all right. There we go. We got one. Okay. So these guys didn't know that. Did you know that? Did you? You never taken accounting before and you knew debit meant left? How'd you know that? Somebody showing you around campus says you're going to meet Richardson. You better know what debit means. Yeah. That might have been it. Cheated. Okay. Anyway, merchandise inventory went up by 3, right? So you must have bought it with what? Cash. Okay, good. Cool. All right, guys. You want to do the current liabilities now, or do you want to keep going down the assets? I don't care. Put check marks next to one you did. Should we do the current liabilities? In case we run out of time on the quiz or test, final or something. You won't. Okay, accounts payable. It's more, so what happened? Some more cash, of course. You didn't pay the bill, you have more cash. 9,000? Okay, good. All right, wages payable? Went down by 200, didn't it? Is that a current liability? Wages? Sure it is, okay? So it went down, right? How much? Want brackets around it? So you paid it off? I think so. Okay, good. Notes payable long-term? I don't think that's a current liability. So you want to do non-current liabilities now? You know what's hardest is going to be what? Property, plant, and equipment? I do that last. And just get all the points first. And come back. That's the nice thing about putting check marks next to it. You can do it in any order you want, though. So what would you do with notes payable long-term? Look down below. What does it say? They bought equipment. They sold equipment. They paid long-term debt. Oh, and then there's issued stock. No dividends. Other expenses included a whole bunch of stuff, right? Accounts payable includes only inventory purchase made on credit. Okay, no taxes or everything else are all fully paid in cash. Great. Okay, fantastic. So which one of those matter to me? B, 6,000 on long-term notes payable. So let's do long-term notes payable. What does it start at? 44,000. What did it end up at? Looks to me like they paid off some. How much? 6. So they said they paid the long-term notes payable of 6. This made it real easy. How much did they borrow, you guys? Because it would be debit and notes payable, right? In credit cash. So how much did they borrow? Nothing. What if they borrowed 100? How much would they have had to pay off if they did borrow 100? 106, right? 100 plus the 6. Right? And then you'd show both of them, wouldn't you, on your cash flow statement? In this case, we only did one, so we just got to show one. Made the problem too easy. Okay. So what do we do here? Where do we put that? Long-term debt. Financing is where your financing came from. Investing is what you invested, your non-current assets. And what hangs you up is you might think, well, a bond is an investment, right? But remember who we are. We're borrowing the money. We're not, right? We're not investing. Okay? Investment held in maturity bonds, we go and invest. Okay? Good. All right, anyway, so what do we got? 6,000, you guys? So what we did was what? retire long-term debt. You can just say pay long-term debt, I don't care. Okay, 6,000. Brackets around it? Yeah, it's debit, long-term debt, credit, cash, right guys? Brackets up. Okay? All right, so check off that account. You want to do contributed capital? Contributed capital would include what? Common stock, additional paid in capital and common stock, preferred stock, additional paid in capital and preferred stock, right? It's all the contributed capital. It went from what? 72.6 to 88.6. How much does it change there? 16,000, and it says issue new shares of stock for 16,000. Isn't that convenient? Right? That's it, isn't it? So they didn't retire any. That's all that means. Okay? So if you issued stock, what is it? Credit common stock? Debit? Cash? You bet. Where does it go? Major source of your, it's equity, so that's going to go under financing, right? Major source of equity, major source of financing. Okay, so issue, right? Common stock. 16,000. Everybody good? Easy, isn't it? Now you can check that one off. And we already did retained earnings. What do we have left? Property and equipment, huh? Property, plant, and equipment. Okay, so let's do those. Right? What accounts do we have? Property and equipment, right? And what goes with it? Contra account? Accumulated depreciation. By the way, you guys, this is the first accounting class here. We do about twice what you would do in 2 years of accounting in high school. No, 4 times what would you do in 2 years of accounting in high school in one class. This book, we've gone cover to cover, the whole thing. And it was fun, wasn't it, you guys? You know, it was fun to know it, not fun to do it. All right, not fun to, I don't think it's very much fun to learn stuff. I think it's really cool to know it. What's that?
What did we do for retained earnings? Because there was no dividend.
Yeah, there was no dividends, so you don't have to worry about it. If there was a dividend, we would have had the income, would go under operations, right?
Yeah.
And if you did have a dividend, where would the dividend go? You're paying it to the owners. Where would it go, guys? Financing? It'd go under financing, right? Why? When you issue them the stock, they give you cash. When you pay them a dividend, you're giving them back some of their money, right? Okay? So dividends would go there, right?
Okay.
It's only the income goes out under operations, right? Revenues less expenses. Got it? Okay, good. Good question. All right, plant and equipment started with what? 100? Where did it end up at? 121? What's the minimum amount we must have bought? 21,000. Good. Okay. Accumulated depreciation? Started at 25. What is it now? What's the minimum amount of depreciation expense they must have had? 5. Now, could it have been more than 20 bought? That was one, what was it, 121? Could it be more than 21 bought? Well, sure, they could have sold some, right? Could it be more than 5,000 accumulated depreciation expense? Debit depreciation expense, credit accumulated depreciation. Could it be more? Yes, right? Why? We could have sold some. Did they sell some? It says they bought equipment for 31,000 cash, right? So we can do that first. What's the journal entry? Debit, plant, and equipment, right? For how much? 31,000. And credit what? Cash. You know, as soon as you realize that, you can put it on your schedule if you want, right? We're explaining 31,000 increase here, aren't we? Everybody agree? Where would you put it? I invest in plant and equipment, don't I? Okay? So what would that be? Purchase and investing. Purchase equipment? Was equipment, wasn't it? How much? Do I have more or less cash? Accredited cash, you guys. What do I think? Less, of course. Okay, good, good. All right, then what do we got? Sold some equipment. It costs 10. So what do? Credit equipment? You don't have it anymore, right? 10,000? Okay, what else? That's 10 coming out of here. You know what? That explained the change in that account, didn't it? Added 31, took out 10. Yeah, okay. All right, what else did we do? It says accumulated depreciation was 7. What's that going to be? Debit accumulated depreciation. True? For 7? What was the book value of this equipment? 3? 10 10 less 7, good. What do we sell it for? Cash, at how much? 4, everybody agree? What do I have? I sold something that's on my books at 3 for 4. What do I have, guys? Gain. Gain on sale. This gets easy, doesn't it? So gain on sale is how much? 1,000? Okay, what do I want to explain here? I took the 7 out of accumulated depreciation, right? I want to explain that 3 change between those two accounts, don't I? That's what I want to put on my cash flow statement. How much cash am I going to put on my cash flow statement, seeing as I got 4,000 in cash? How about 4,000? You guys agree? So where's it going to go? Non-current asset, where does it go? Investing. Okay, so you got the thought process? Not a big deal. Okay, so the sale, is it equipment we sold or building? It's pretty cheap, I bet it was equipment, huh? Okay, so $4,000 coming in, but that's too much, isn't it, by 1,000? What the deal is included in your income statement, it doesn't show, well, it does show it there. In your income statement, they show the gain, don't they, 1,000. It's double counted. The 4,000 that we just wrote down includes the 1,000 gain, doesn't it? I don't want the gain under net income, I want the gain under investing. So I want the 4 under investing because that's the cash I got. So I'm going to have to do what? Subtract the 1,000 gain under operations, aren't I? Right? So here's the gain on sale. And of course you'd write it out nice in real life. You know, gain on sale of equipment. Okay? So it's a non-operating gain, so we take it out of operations. Make sense? Okay? All right. So that takes care of this one, doesn't it? What's left? Does it say what the depreciation expense was somewhere?
It says 12,000.
Yeah, it even gave it to you. Did they have to? They did, didn't they? In Part E, they told you that's nice. So you know it's debit depreciation expense for 12, credit accumulated depreciation for 12, right? But what if they hadn't told us? Would we know it was 12? Yeah, sure, because you started with 25, you took 7 out, what did it make it? 18, and now it's 30. How much did they put in there? 12. Got it. So they didn't have to tell us as much as they did in this problem, did they? Right, in several places. Okay, so what would that be, everybody? What would that journal entry look like? Debit depreciation expense, right? For how much? 12. Credit accumulated depreciation. Is there any cash in that journal entry? The answer is no. But what's the deal? I took the depreciation out of net income, didn't I? So from a cash standpoint, what's the deal? My net income is 12,000 lower than it would have been from a cash standpoint. So I add back the depreciation. Got it? How much? Okay? Everybody good? Okay. So now what do I do? Have I checked off everything? I can check off plant and equipment and accumulated depreciation. I've done every account, haven't I? You put the check marks on the quiz. It'll really help you. Because you won't have to think about which ones you did and which ones you didn't. And then you don't have to do them in any particular order. Whenever it occurs to you, when you see it, you can do it. Okay. Now what? Total them up, huh? What's this called? Cash flow from operations? Total cash flow from operations, you could say. Add those up for me. What's this going to be? Cash flow from investing activities, right? Okay, let's get that one. And then what's this one going to be? You guys aren't saying anything. Cash flow from financing activities. Okay, give me the numbers. Yes. Some of you do
Operation, that's 22,000.
22 positive. Yeah. How can I have 22,000 positive if I only have 12,200 income? What happened? 9,000 increase in accounts payable helped me, right? 12,000 depreciation helped me, right? I got hurt by the increase in receivables and the increase in inventory. Everybody see what's going on here? So you can sort of read the statement, can't you? Okay, what's happening? What's this one? 27,000 negative? Right here. And then what? 10,000 positive? What do you want to do now once you got those numbers? Yeah, make sure it totals up to the 5,000 increase in cash, and you know you did it right. Okay, so what's 22 less 27 plus 10? It's 5 positive, isn't it? So, you guys do this? Easy.
So as long as like the taxes and stuff aren't on
there's no deferred income tax, you don't have to worry about it. There was none here. There's probably
Because it
tax
does say-
expense.
Yeah, it says it taxes down there.
Oh, yeah, assume the taxes were fully paid. Assume all the expenses were fully paid, right? And then they have taxes there. So what they did was they debited tax expense and credited taxes payable in the current year for 6. And then they debited taxes payable and credited cash for the 6. So there's no deferred income tax. So the problems I gave you were a little harder. So we had that in there. Yeah, which I'll probably do on it.
You'll make it harder.
Yeah, I'll make it a little harder for you. It's more fun, isn't it? Yeah, this is boring. Yeah.
I'm still confused why accumulated depreciation is increased in cash.
Okay, what happened on your income statement is you subtracted this 12,000 from net income. So this is accrual basis net income, right? So all the deferrals and accruals are in here, which she's supposed to know. You will soon. Don't worry about it. This summer. Okay? All the accruals and deferrals are in here, right? This is not cash, is it? All those accounts receivable, debit accounts receivable credit sales, all of the debit unearned revenue credit sales, that's included in there with the cash sales, right? And the same on the expense side. All the prepaids, you with me? And all the accrued liabilities, it's all in there. So this is not cash. What I want to get is how much did I get in terms of cash flow, okay? So I'm adding back this depreciation because the journal entry was debit depreciation expense, credit accumulated depreciation, but it used no cash, right? When do you use cash buying equipment? When you buy the equipment and pay for it, right? Or if you buy it on long-term debt, when you pay off the long-term debt. True? Okay. Does that do it?
Yeah.
Okay. Why are we adding back this gain or subtracting a loss if you had a gain or loss of sale? Why are you doing that? Because we want to show the cash over here, right? It's a non-operating item. So this 4,000 included that 1,000 gain, didn't it? I don't want to double count it. That makes sense? So I had to subtract the gain, even though it seems silly, doesn't it, to subtract the gain and to add an expense or to add a loss. But it's because we're looking for cash flow. Good. Anybody else? All right. Got it. You want to do some for the quiz, maybe? In a couple more minutes. And then we'll do in the other class I did the first one's from the quiz, and then didn't get through this, okay? So you can watch that if you want, and then in the review session we'll do some more, okay? On both sides. All right, let's see. All this junk, you guys, is out on Moodle. I'm the easiest teacher.
Are we gonna have
Here's old quizzes and tests. Are you gonna have what? Oh, yeah, no, the ratios that were on this quiz are only going to be on your test.
Okay.
But you can use that to study for the test.
Are we
It's
gonna,
in chapter, what's our last chapter? 14, 13. In chapter 13, we're going to cover that.
okay,
But that's not on the quiz, only on the test and the final, right?
so we can do this first part, but not the last part.
Yeah, I wouldn't bother to do those yet. I do those when I'm getting ready for the test. Okay?
Okay.
Yeah. All right. Thanks.
I was like, wait a second.
That'd be more fun, wouldn't it, if I had to do something we haven't covered? I did that on the last quiz, didn't I? Didn't I put something on there that I hadn't covered in class?
I don't really know if you actually can find it. That's what you said. I'm like, oh yeah, I know it. And then Emily told me that if you put something on a post that you don't know, just say no.
Is this what she's going to do in her career too? That's hilarious. I don't think that one's going to work. It's fun. No entry. Yeah, if you don't know what he wants, just say no entry. Maybe you'll edit. Come on, open. Is it say? Oh, it is open. Okay, thank you. Wow, it is open. I just lost it somehow. Okay. Oh, that's the answer though. I don't want the answer. That's no good. There it is. There's a quiz. Okay, that's the answer to the other thing. All right. So, what do you want to do with this first one? 2,000 shares. How many shares are there in the company? We bought 2,000. A million. So what do we own here? Yeah. marketable security. What kind? That depends on what? How long you hold it. How long you're holding it. It says 1 or 2 months. Some people would say that is a trading security. Some would say short term. It's a judgment call here. Okay? So let's do it both ways. If it's short term, what do we call it? Investment in? So short term. What do we call it if we think it's a trading security? Of course. You know, you're only on a real short period of time. If we think that's a real short period of time. Investment in trading security, right? That's it, isn't it? What if I was going to hold it for more than a year? Investment in available for sale securities. What if it was more than what percent where we get some significant influence? What percent? 20%. What if I went between 20 and 50 on it? What's that? I have significant influence. I call it an investment in affiliate. An affiliate in your company, right? Investment in an affiliate. Put the company name on it. Okay? What if I own more than 50%? 50 to 100? Investment in a subsidiary because you have control. You got it. Okay? So these are easy. So this was going to be a marketable security, right? I'm holding it for the gain in value, we hope, right? Maybe I get the loss, but hope for the gain. And then what else? Dividends, right? I'm not running the company though, right, guys? Okay. So we paid $9 a share on 2,000. Debit what? Oh, that was good. Do it again. Last time was that. It's getting better and better, isn't it?
Well, it did make the box around it.
Let's try it over here. All right, let's get one of these. Go back to that. Okay, I'll just try writing it over there. Now it's not making the box anymore.
Just do it on
It
the
might
page.
stop. Investment in, do it over here.
No,
No, it won't.
no, on your smartboard page.
Oh, go back and forth. Yeah, I
Yeah.
can do that. That'll work. Let's get a new one here. It'll let me. Yeah, it did. Okay. All right. Investment in what? Either avail for sale short term if you interpret it as that, right? Which is how much? It was $18,000, wasn't it? Okay, and then it would be what? Credit what? Cash. Okay, good. What if you thought that that's a real short period of time, so I have no control? Or I'm sorry. So the market value is not going to change before I sell it, right? So I mean, real short period of time. Debit what? Investment trading securities. Okay, if you thought it was credit cash, if you thought it was more than a year, what would you change it to? Debit investment available for sale. Long order. Big deal, right? You can do that. Okay? So that's at the time that you buy it. Then what happens? Yes, ma'am?
Is there a test if, like, there's a problem like this and basically like just judgment and you do
I'd have to. So what I try to do when I write them is make it real short or a little longer. So if I tell you 3, 4, 5, 6 months, that's available for sale short term. If I tell you less than a month or something, right? I do it. Okay, needs to be trading security.
under 6 months?
No, I wouldn't even do that. Under a month probably. You know, this said a month to what did it say? 1 or 2 months?
Yeah, 1 or 2 months.
Yeah, so it's probably a trading security probably, but I didn't write that particular problem, so I make it a little tighter if I do it. Right? So it's more obvious what it is. Okay, so you don't have to use as much judgment. All right, then what? What did they tell you in the problem? What do we got? It was $9, right? Well, what about the par that's $1? What about the par that's $1? It says the par is $1. What about that? Who cares? When would I use the par or stated value? When the company issues the stock. What if I issued the stock at $9 a share? Let's issue one for cash, $9 a share. Debit what? That's going to be on the test, right? Equity's on the test. It's not on the split, but it's on the test. Debit what when I issue stock? shows it. Jetty cash, $9 plus one share, right? Credit what? Common stock, how much? $1, the par value, right? $1. And credit what? Paid-in capital in excess of par, right? You know, the $8 is the difference, right? Credit additional paid-in capital in excess of par, great. You guys know how to do this, don't you? Okay, so that's what that's for. What would you do in a problem like this? Say, that's nice. I mean, anything to do with this problem. Okay? All right, they report net income of $700,000. Am I running this company? No. So what do I do with that? I'd say, yay, it's wonderful, and make no entry. I'd say no entry. If I wrote that down, you know, going down the list, you write no entry next to it, so there's a no entry, okay? On the next one, if you don't know what to do with it, please don't write no entry, because that's wrong. Okay, yeah, that's funny. Okay, so 180 of cash dividend. You know what? I'm taking what the market gives me. The market's giving me a dividend, right? But I don't get the whole 180,000. I own 2,000 shares. What does each shareholder get? 1 million shares into 180,000 is what? 18 cents a share. Everybody agree? How many shares do I have? 2,000. What's 2,000 times 18 cents? $360, right? 2,000 times 18. 2 times 18. Okay.
Honestly, bet.
She's a chemist. Yeah, she can't add. Okay. Anyway, we can't add without calculators. Come on. Okay. Anyway, so what do you got, guys? What do you want to do with that? Debit what? In both of them. It's going to be the same for both of them. Debit cash. How much? $360. And credit what? I'm taking what the market gives me. It's revenue. Dividend revenue, or you can call it dividend income if you want. Either one's fine. It's really probably income because there's no expenses that go with it, right? But people call it both. It's fine. And it's the same on all of them, right? Same as it was long term too. Okay? Because I have no control. Everybody good? Coming back. Supposed to know it by now. All right. Well, then what? The market value went down to 8. It went from 9 down to 8, didn't it, you guys? What happened to me? I lost. Okay, but I didn't sell the stock, so is it a realized loss? Realized getting the cash? No. So what is it? It's an unrealized loss, isn't it? Everybody got it? So that's what I'll call it. Okay? I think it might recover. Okay? All right? So it's unrealized loss. Okay, so let's record that thing. What would it be if it's an investment available for sale short-term or long-term? What would it be? Loss on what? Change in market value. Loss and change in market value on what? I'm sorry, an unrealized loss. Come on, Keith. An unrealized loss on reduction of market value of what? Available for sale. This is short term. If it was long term, you'd say long term. Okay? What was your loss? $1 a share, 2,000 shares. How much is that? $2,000. Credit what? What went down in value? Your investment, right? Investment in available for sale. Short term. Everybody good? Or long term if it was long term. What kind of an account is this thing? Whoops, that's an investment account. What's this account? Unrealized loss. What is it? It's a contra what? And it's going to go straight to other comprehensive income. Yeah, contra equity. Yeah, you got it. That's other comprehensive income. It's an equity account, okay? Because I think that value will change before I actually sell the stock, right? Because I'm holding it for more than a few days. What would we have on the other side over here if it's a trading security? Credit investment in trading security, wouldn't you? How much? $2,000? Everybody agree with that? Debit what for 2,000? Unrealized loss, right? On what? Yeah, decline in value of trading securities. Yeah, absolutely. What kind of account is that? I think it's probably going to happen because I'm going to sell this stock before the market price changes much. So what does it go on? Which statement? That one goes on the income statement. And I won't ask you to write that down in a problem like this, but it might be on a multiple choice question or something, right? You know, where does the gain go? That kind of thing. Yes? No, the available for sale short-term or long-term go to equity. Is that what you said?
Yeah.
Yeah, they both go to equity, long-term or short-term. The only one that hits the income statement is idea is you're gonna have it because there's not gonna be any time between the end of the year and when you sell it so soon that the market price probably won't change. Versus on the other ones, you don't know if it's going up or down or what's gonna happen. Make sense? That's the rationale for it. Everybody good? Not too bad. All right. Do you want to do one more and stay a few extra minutes, or do you want to go back? Do one more? Yeah, like 3 minutes or something. Okay. Okay, let's look at, let's do the one that's equity method. This is a subsidiary of number 2. Sure, do that one. And I did it with the other class. We'll do it again in 9 or something. All right, what if you have 40%? What do you think? I don't have control, right? But I have significant influence. True? So it's an investment in a affiliate. Sure. So what we're going to do is when we record it, what do we pay for this thing? What does it say? $4 million, right? For 40% of the company? Okay? I gave him cash. When you want to credit cash, now it's going to work. Okay, good. All right, so I gave him cash of $4 million. Debit what? Investment in affiliate, and the company's name probably? Affiliate Pop. 4 million? Everybody got it? That's it, wasn't it? Okay, that's it. Now what happens? When I pay a dividend, I voted to give myself back some of my money, right? Gave myself some of the profits. So that reduces my investment, doesn't it? When the company earns, I am helping earn. What portion of the earnings do I earn? Oh, 40% of it, you guys. What portion of the dividend you get? 40%. What portion of the earnings you have? 40%. Okay, what happens when the market price changes? I'm thrilled that I'm not selling the stock. I'm not holding it to sell it or for appreciation. I'm holding it to run the company and make it worth more. Got the idea? That's the theory. Okay? So let's record the cash dividend. How much would we get? It is how much? 1.8 million in cash dividend? I don't get it all. Do I? I get 40% of it. What's 40% of 1.8 million? 36, 72, 720,000? All right? Got it. Okay, anyway. I'm going to pay myself this money. So I get the money. What is it? Debit? Cash. 720,000. Credit what? I'm giving not dividend revenue. That's if I'm taking it, what the market gives me. What I earn is the income. When you earn, you get your income. When you pay yourself a dividend, you have less investment now, right? Because we're going to add the income to our investment, and then when we receive cash, we're going to reduce our investment. Don't you suppose? Make sense? Okay, so what is it going to be? Credit investment in affiliate. You guys have some work to do on this, don't you? Okay. 720,000. Okay, what are we going to do with the year end? What are we going to do with the fact that the increase in market value, or decrease, I think it was an increase, happened? Went up from $4 to $4.20. We're thrilled. What are we going to do? No entry. Got it. Do you have a question? Or
Yeah, how come on the first one for the dividend you did it too? Is it really, I don't usually do it. For the first one you got like the...
I debited cash. You mean the other earlier problem?
No, yeah, you did the... Yeah.
I debited cash and credited dividend revenue, which is dividend income. Yeah, because there I'm taking what the market gives me. I didn't pay myself a dividend. The market gave me a dividend, right? The company gave it to me. Here I'm giving myself a dividend because I'm making the decision, right? I have 40% of the vote. I paid myself a dividend. Making sense? Okay, so what do we do with the income? 5.2 million. What's our share of it? 40%. Increase your investment by 40% of that. I think that's 2,080,000. I didn't just calculate it. We did it in the other class. I think it was 2,080,000. Okay? I'll show you one more thing. Okay, what's this going to be? Debit, investment in the affiliate, right? Pop. And then what? Credit what? No! You're going to give somebody cash? Yeah, we're trying to do it too fast.
Are we on that?
Income from affiliate. Yeah, income from affiliate. Okay? So, anyway, keep working, guys. Hang in there. You guys got a couple more minutes? Do they have a
Yeah,
couple more
I'm
minutes?
just chilling. We're going to go to lunch. I don't know how you do it.
Do
Your
what?
classes all day long. And you just use every minute of it, don't you?
I don't know.
You use a lot of accounting.
No, I hate it.
There you go.
Get paid. But
It's not always supposed to go down that street.
You go to the town?
Yes.
Yeah. You go to high school?
Meade County.
Meade County. Meade County. I've been.
It's about 45 minutes away.
What's the
Brandenburg.
biggest town? Okay. Good. Are you
You
a
get
Catholic
that.
school or a public school?
Public. We don't have a Catholic school. We
Good.
used to.
Good. You have a lot better education than she has.
I went to a Catholic elementary school for kindergarten and first grade, and then they shut down. So. Really?
Stick around for a few minutes and you can meet, well, you can meet him. What are you in the accounting association?
The vice president of public relations.
Okay, yeah. Do you have an internship yet?
Yeah, Young Brains.
Young Brains. Yeah. Okay, what year are you in?
Sophomore.
Sophomore.
Just finished up sophomore year.
Yeah, things happen fast. What does Young Brains pay you? You know, 12 an hour, that's all.
Starting out.
Far more than your word, yeah. You just start. Okay. When are you going to do a full-time internship?
Next spring.
Next spring. What are you going to make then?
A whole lot.
15, 25, 30,000. For
For a
3 or 4
semester.
months.
For like 3 months.
3 or 4 months. No kidding, it takes second
Pretty
half
young.
of junior year. Isn't that Mr. Did I give you both those?
Yes.
questions?
Yeah.
But
Do you guys have time? They need to join the accounting association right
Yeah,
away. You guys are both gonna do the summer scholarship? Can you come and do the summer scholarship?
Maybe.
You can live on campus.
She's a question.
We
Do
need
you have
to
an
talk.
answer for this?
Yeah.
She's already taken English 101. And she's wondering if
How about psych?
can she take a different kind of course?
Oh, yeah.
Like she can take accounting and take a different course?
Take a psych class, but.
So that answer a little bit of the question?
Yeah.
Yes.
Because I
There are 3 or 4 classes that'll fit, that are freshman level classes that'll fit with the accounting class.
Okay.
Right? You have to do the accounting class and then one of it. So we'll get another class for you, no problem.
I have
That's
to
not a
decide
problem.
if I want to go here first. That's another step.
Oh, well, I
So
can-
anyways, what are your 2 schools you're looking at?
So,
UK.
so why would you go to, oh, here versus UK, UK is a very good place. If you want a really big school.
The
with
good
big
thing is
classes,
you're looking at completely different options. That's the good thing.
Oh,
Because then
yeah,
you can
yeah,
like
yeah.
figure out what's better.
I'm either between accounting or education.
Oh, wow.
So,
Oh, wow.
yeah, they're very different.
Are you
but-
talking to education people here too?
Yeah,
There was no one available today, so she wasn't able to talk to me
and
today.
I'm not a huge fan of the education department, the way they have it set up here.
Oh,
So,
pretty good.
I
Be
mean,
a good place.
I've talked to quite a few people, like within my school district, and the way they have it set up is you get a dual certification, so
Oh,
you're
I see.
qualified to
Yes.
teach classroom and special needs, and most districts will use the special needs degree, what your certification for that, whether you want to or not.
Because you've got it. They've
And
got it.
because it's so hard to find people who are certified for that, and
But
then,
it makes you real marketable.
yeah,
everybody
but
gets
the
hired.
thing is, if that's not really something that's like,
You're not interested. Oh, well,
and so that's
Yeah.
kind of, and then one of the professors said that I could go on and get my master's like straight out of college, and then that will take away that certification.
Yeah, it's true.
But a lot of the administration in my county said they don't usually hire first year teachers who have their masters already.
That's because they don't want to pay them money. Yeah. And you
So-
want to go back home?
I'm not really sure, but I know one of my friends who is getting ready to graduate from UK with her education degree from there. They told her not to get her master's yet.
Really? Wow.
At, like, not UK, but the school that she
Yeah.
was like student teaching at, because she won't get a job.
Well, on the
It's kinda
accounting
funny.
side of things, what's that?
It's kind of funny how that works, you know? Like, don't get a master's, like.
I mean, you
Yeah,
have to
no.
eventually, but they don't. It's like better if you don't have it right
Well,
away.
they can afford you.
Yeah.
Is what they're worried about. Yeah. Yeah. That's bad.
And then Allison, you're between like something in the business school. You just in computer science, something you also consider.
Or
So,
physical.
so you're a junior still. So
Yeah.
you still have some time to
Okay,
kind
I've
of
got
figure
time
it
to
out.
decide. Okay. Well, you won't do the scholarship class this summer. Next summer. Anyway, so why would you pick Bellarmine over UK?
I think Bellarmine's more kind of like family environment. It's kind of closer together, and I think we have a lot better connections with all the firms in business. If you get plugged
How many
in,
firms in town do you know?
probably I actually know people there. Like, I have a good relationship with probably 5 to 6 right now.
Who do you like?
I like KPMG a lot. I just got accepted into EY's summer leadership program yesterday.
Do that at the end of your sophomore year. The reason to come here is because you get a job so much easier.
If I
So
decide
much
to do
easier.
business, then Bellarmine would be my top choice, but I'm not really sure.
So you're still kind of decide which degree to do.
Education. That's cool.
Well, if money is a big deal too.
Do what?
To do accounting and education. You can teach people like me.
Would that be doable?
That's
Well,
boring.
are you guys ready to head back on over?
Yeah.
Do you have any other questions for Keith?
If you want to get together, we can talk this afternoon if you want about exactly how the program works, the stuff
Okay.
that's written in there. If you guys have time at 1 o'clock, I'm going to
See,
be
I don't know
down.
what our schedule looks like.
Yeah, I don't know. Will you still be on campus? I don't know if this.
I'm probably gonna leave.
Yeah. And Kayla has an appointment with admissions counselor at 1:15.
Oh, never mind. Okay.
But
Give me a call.
But yeah.
Good.
Sounds good.
Drop me an email. Give me a call.
Thank you for
Thank
letting
you
me
very
forward.
much.
See you guys.
Have a good rest of your day.
Bye. Thanks for
Hope
bringing
you
it by.
have a good class, guys.
Hope we see you. Be in college somewhere, you guys.